Ichimoku Kinko Hayo translates to one-glance equilibrium chart. In a single look, you should see trend direction, momentum, support, resistance, and a forward projection of where balance lies. Most traders dismiss it as messy spaghetti. Today, we strip it down, decode the math, and turn it into a precise, rule-based system you can use tomorrow. Ichimoku has 5 components. Tenkin, the conversion line, is the midpoint of the highest high and lowest low over 9 periods. Kijun, the baseline, is the same calculation over 26. Chikou Span is the average of Tenkin and Kijun, plotted 26 periods forward. Chikou Span B is the 52-period midpoint, also pushed forward. Chikou is today's close, shifted 26 periods back. Notice it is all midpoints, not moving averages. That makes it a pure equilibrium tool. Moving averages weight every close. Midpoints only care about the extremes of the range. That makes Ichimoku highly responsive to swing structure and immune to choppy closes that distort a simple average. Tenkin and Kijun behave like dynamic support and resistance because price tends to revert to the midpoint of its recent range. When that midpoint stops moving, the market is balanced. When it slopes, momentum has direction. The Kumo, or cloud, is the space between span A and span B. When span A is above span B, the cloud is bullish and typically shaded green. When A is below B, it is bearish. Cloud thickness reflects volatility and the strength of support or resistance ahead. A thin cloud is easy to slice through. A thick cloud is a fortress. Because both spans are projected 26 bars forward, you get a leading map of where equilibrium will sit. Chikou is the most misunderstood line. It is simply today's close-plotted 26 bars in the past. If Chikou is above the price action from 26 bars ago, current strength exceeds prior structure. If it is tangled inside old candles, the market is in conflict with its own history. Pros use Chikou as a veto. No long signal is valid unless Chikou has clear air above past price. A textbook long signal has 5 confirmations. Price is above the cloud ahead is green. Tenkin has crossed above Kijun, called a TK cross. The cross itself occurs above the cloud, not below it, and Chikou is above price from 26 bars ago. When all 5 align, you have what Japanese traders call a Sanyaku Koten, a triple bullish signal. Weak signals have 2 or 3. Strong signals have all 5. Kijun is your trailing anchor. In a trend, price respects Kijun like a magnet. A daily close back through Kijun is a momentum warning. A close back inside the cloud is your trend invalidation. For stops, place them just beyond the far edge of the cloud, Chikou Span B, because that is the deepest level of forward equilibrium. This gives stops that breathe with volatility instead of arbitrary percentages. Here is a synthetic uptrend. Watch the sequence. First, price pierces the cloud from below. Then the cloud ahead flips from red to green, signaling forward equilibrium has turned bullish. Tenkin crosses above Kijun. Chikou breaks free of old candles. Each pullback finds support exactly at Tenkin, then at Kijun, and the cloud never gets tested. This staircase behavior is the Ichimoku trader's bread and butter. Now Apple on the daily. Notice how price respects the cloud as both support and resistance. TK crosses that occur above the cloud lead to clean continuation moves. TK crosses inside the cloud, however, fail repeatedly. That single filter, demanding the cross happen on the correct side of the Kumo, is what separates Ichimoku amateurs from professionals. Ichimoku is a trend system. In a range, it is brutal. Price chops through the cloud, TK crosses fire constantly, and Chikou tangles with old candles. The cloud also lags because span B uses a 52-period range. On lower time frames, signals arrive late. Never use Ichimoku in isolation on a sideways market, and never apply it below the 1-hour chart without serious testing. Pair Ichimoku with an oscillator to catch exhaustion the cloud misses. RSI divergence against a price push into a thick opposing cloud is a powerful reversal setup. ADX above 25 confirms the cloud signal is happening in a trending regime, not a range. Volume profile or VWAP can validate cloud breakouts. The goal is always the same. Use Ichimoku for structure and a second tool for timing or regime. 3 mistakes kill Ichimoku traders. First, taking TK crosses inside the cloud, which is the lowest probability zone. Second, ignoring Chikou because it looks redundant when it is actually your historical confirmation. Third, changing the 9, 26, 52 settings. Those numbers come from the original Japanese trading week, and they tune the projections to match. Alter them, and the cloud loses its predictive geometry. Tomorrow, open a daily chart on a liquid instrument. Mark the cloud, identify whether price is above, below, or inside it, and that gives you regime. Look for TK crosses on the correct side. Demand Chikou confirmation. Use Kijun as your trail and the far cloud edge as your stop. Practice this read on 20 charts before risking $1. This is education, not financial advice. Trade your own plan, manage your own risk, and let the cloud do the heavy lifting. If this helped, do me a favor. Hit the like button, subscribe, and tap the bell so you don't miss the next one. See you in the next video.